Hello, I'm Alex Davies, founder of Wealth Club. Today I'm with Matthew O'Kane, Managing Director of Nexus Investments, to talk about their Scale-Up EIS Fund. Hello, Matthew.
Hello, Alex.
First off, just tell me about Nexus and a bit about yourself.
Okay, so Nexus was founded in 1994 by Harry Hyman. He's still the CEO, Managing Director of Nexus even today. He's best known for being the manager of a 2.3 billion healthcare assets REIT called Primary Health Properties PLC. Around 6 years ago, I started with the business to help build up an EIS and ventures investment arm. My own background is that I qualified as a chartered accountant at PricewaterhouseCoopers. I've spent many years working in investment, both within private equity space and tax efficient investments.
So tell me about the EIS. What does it aim to do for investors?
Okay, so the specific EIS Scale-Up Fund that we launched just over 12 months ago now specifically aims to give high net worth investors and indeed their advisors access to a portfolio of 8 to 10 EIS qualifying investments managed by Nexus across the three particular sectors that we know very well and have been investing in for some many years now. That is data, education and healthcare.
So why are you so well placed to do this? Have you been doing it before?
Yes, so there's two or three unique selling points to the Nexus Investments proposition. One of them is that for almost 6 years now, we have been investing our own personal assets into EIS qualifying businesses. And in that time, we've seen a number of them grow substantially with our involvement. The second USP from the Nexus Investments point of view for investors who join us on the journey is that we've historically been very active investors and we will continue to be so. So what we mean by that is that we invariably join the advisory boards and sometimes the main boards of the businesses that we work with. We're very founder friendly in that respect. And I think the third tenet that marks us out as somewhat different from other providers in the space is we have a long and rich history in the healthcare and education spaces specifically. So for example, as well as managing a very large REIT that I referred to earlier on, we also run a publishing and events business called Investor Publishing. We basically get some of the best deal flow in the health and education technology spaces, often many years before bigger institutional investment groups get to hear about these deals, but invariably they follow us into those deals. So that's a great position for EIS investors to be involved in a business earlier when the potential for improved performance is so great in later years.
Do you want to give me some examples of companies you've invested in?
Yeah, sure. So I'll give you a couple of examples quickly from even before we set up our fund in 2018. And I've got a couple of examples here on the table. The first deal that we did was into a healthy, sugar-free, dairy-free ice cream business. Why did we invest in that? Well, there are issues with global obesity. There are issues with diabetes generally around the country and indeed around the world. And we liked the idea of backing one of the first businesses to tackle that. Only last week, we were working with the founders of a business called Smarter. Smarter are the manufacturers of a fridge cam. It's a very clever technology business, Internet of Things, that essentially enables people to take control of their food waste. In the fund, people who've already invested into the Scale-Up Fund in 2018 and 2019 are now shareholders in two or three interesting businesses that I'll just touch upon. The first of those I thought might be interesting to talk about is called Marcopolo Learning. So this is a United States originated company that provides early years children, 3 to 6 year old children, with a suite of fascinating online learning materials that have been curated by professors at Columbia University. So Marcopolo Learning for kids. It's a really interesting online business. You can download it, for example, as a parent to use. Another one that we really like and have invested into recently is in the data space. It's called IPushPull. It particularly helps businesses, B2B, to be able to share real-time data interoperably, which essentially means between different parts of an organisation or with other third parties, in an encrypted, end-to-end, secure but auditable manner. It doesn't sound very sexy when I describe it like that, but it's actually transforming certain parts of the financial markets. And you only have to see the current activity with London Stock Exchange being subject to 2 takeover approaches. And another company that the fund has already invested into is called MedicSpot. So MedicSpot is a business that's going to enable more people across the United Kingdom to be able to book appointments online to see GPs. And it partners with pharmacies all over the UK. So it's a really interesting alternative to some of the progressive app and video-based businesses that we're all familiar with, I think, certainly in London, but it's more pragmatic and realistic to the expectations of people perhaps between the ages of 25 and 45 around the United Kingdom, who increasingly find that when they need to see a doctor, it's difficult to do so. It involves queuing up early at the local GP surgery. You may not get an appointment for 2 days. And what MedicSpot does, which is really clever, is it uses some element of pharmacists' waiting room space, and then it enables you to see a doctor online, but also get certain really valuable tests done through a clever piece of kit that's connected in with MedicSpot. So we like businesses like that, ones that are leveraging and piggybacking off other assets. We think there's a huge transformation taking place in the world of healthcare, and we're giving our investors exposure to a small part of those businesses, whilst at the same time underwriting some of the risk through the use of EIS.
And where do you find all these deals?
So we're very lucky in that we have a great network of founders who we have backed over the last 5 years. We've done over 50 rounds of EIS investment since 2014. And founders are usually very well connected. They know what Nexus likes, and they tend to attract other similar caliber mission-driven founders. So we see a lot of good deals that way. Secondly, I mentioned earlier that the Nexus Group has got deep tentacles within the health and education sectors. So we tend to find deals find their way to us because of our experience. And we've had a couple of interesting exits over the years that also support that. And then thirdly, invariably any early stage business, will have friends and family angel investors who are also keen to let businesses like Nexus know about the deals that they're involved with as well. So we get to see a lot of deal flow that way. And last but not least, I think this is most important, we're starting to build up a reputation as being a top tier post-seed, pre-Series A investor. What this means is that the Series A, Series B investment groups, institutions, for example, who might run a venture capital trust, are starting to see that Nexus can bring them better than average, high quality deals that they like to look at. And in return, when they find deals that are too early for them, they tend to like to bring them for us to have a look at.
And once you've invested, how involved do you get?
We've been described by the chairman of one of our holdings, which is called Hubbox, which is a click and collect software business. We've been described by their chairman as punching well above our weight. In fact, we over-index his description in terms of the value add. So what this means is senior people in Nexus who come from backgrounds of some of the biggest accountancy firms in the world, sometimes big law firms, we've all got entrepreneurial experience from in the trenches. We tend to become very actively involved. That means advisory board roles or main board, but it absolutely means active hand-holding to help the founders of our businesses get through some of the tricky areas that are not necessarily their expertise.
Things clearly go wrong sometimes.
Yes.
Have you had any failures since you've started this type of investing? Clearly for the EIS it might be too early.
The practical reality is that if you're building a portfolio for investors in our fund of 8 to 10 businesses, one would expect to see a percentage of those to not unfortunately be able to succeed as hoped. I'm delighted to say that over 5 years now of putting to work almost £10 million worth of EIS capital, I think the sum total of funds that have not worked out so far is less than 12.5% of the capital that we brought. So the answer is we have had 2 or 3 small businesses that have not succeeded. But the wonderful thing is that EIS, as you know, helps to compensate in terms of some of the downside protection for businesses that have not worked out, in terms of the income tax reliefs, the further capital gains loss relief and so on. But obviously businesses that succeed, that are EIS qualifying, produce capital gains tax free results. So we have an early investment in a business in the education space, which is contemplating at the moment receiving a strategic investment from an enormous US corporation. And if that happens, that should enable the early investors to be able to do a partial exit. And if that happens, they will be earning somewhere between 2 and 4.5x. That puts in perspective the position around building a portfolio.
So what else do you do to sort of minimise against failures?
So I've talked about the active involvement in terms of board's position and monitoring. The taxation aspects are obviously important to understand. We try to feature those in terms of valuation expectations on the way in as well. I think we run a very experienced investment committee. Of the 15 or so transactions that have been proposed to our committee in 2019, that's out of over 100 deals that the team has seen. Out of 15, I think around about 7 have actually made it through. So we tend to decline opportunities rather than accept those. We don't do deals for the sake of doing deals. We're lucky. We have funds under management, but we don't have excessive funds that we have to deploy urgently. And I think the other thing is, most founders will tell you that what they appreciate most of all is anything that can give them a fast track into people and businesses that can help them grow. And if we have a unique selling point as Nexus Investments, it's twofold. One, we always put skin in the game. Myself, our owner Harry Hyman, and other people in Nexus always put our own capital in before we will work with a business. But the other one is then we think we've opened doors for founders usually 4 or 5 years earlier than they might otherwise have been able to open certain doors commercially.
And have you had any exits yet?
So we've had a couple of exits into healthcare businesses that Nexus joined 2013 or earlier. One's called Pharmacy to You, which is involved with online prescriptions. The other one's called MedicSpot, which is to do with sharing of data for healthcare purposes. It was originally actually delivering patients' data to the palm of a doctor's hand in an iPad. And both of those early investors have been able to exit and have earned substantial returns, 4 to 5 times returns. And then we have another business in our portfolio that I just alluded to, where all being well in the next few weeks, we expect there to be a partial exit for early investors. Last but not least, a lot of the businesses that we back in the data, education and health space tend to attract strategic investment and attention as they grow past the 3, 4, 5 year mark. And some large corporates have made offers for businesses in our stable. So far, founders and Nexus and other investors have not yet accepted any of those offers.
So how long will it be until you return investors' money, typically?
Yeah, great question. So everyone always wants to have a return at the earliest opportunity, obviously in a positive nature. 3 years EIS holding period sets a bar. The earliest deals we did, we're starting to see our exit opportunities arising now around the 5 year mark. The way that our fund works as an EIS Scale-Up Fund, it's an alternative investment fund. And we undertake that we will return investors' money as each deal completes. So what I mean by that is there may well be holdings in the fund's portfolio where they are going to receive offers that they will want to accept, potentially as early as 4 years' time, and we will start to return capital on each distribution that arises.
So I want to invest in an EIS this year. Why should I choose you?
Well, I think if you are somebody who has familiarity with the particular sectors of healthcare, education or data, and you can see the transformation going on all around you in terms of using digital in those sectors, then our Scale-Up Fund gives you as an investor the opportunity to build a diverse portfolio of 8 to 10 businesses that are transforming the world around us in those spaces. And specifically, we're focused not on startups and not on institutional sized businesses, but scale up businesses that have got global ambitions. And with our help and our experience and our track record, as an investor, we think we're well placed to return you an interesting return over the next 5 to 8 years. But along the way, you should have some fun, because you should find that you're a shareholder in some of the most promising, diverse businesses in the UK, like the ones that I've talked through earlier today.
Matthew O'Kane, Nexus Investments, thank you very much.
Thank you, Alex.